Good morning. My name is Christopher Bell. I'm a certified public accountant. I'm an experienced accounting tutor. And if you want to book a one-on-one session with me, there will be a pinned comment down below. In this video, we're going to talk about how you increase an asset, a liability, equity account, revenue, or expense, either with a debit or a credit. Because every single type of item in accounting is increased or decreased either with a debit or a credit. Now, when you first start accounting, this can be very confusing. It can be potentially intimidating. But at the end of the day, just think about it. You're only memorizing 10 different steps. And I guarantee you, if you stick with accounting, you're going to do this so much that you will never forget these steps. These steps will be so ingrained in your brain that you will know them forever. I promise, okay? So, let's go through the motions. Assets. What is an asset? It's something that you own. It's something that you have. How do we increase an asset? Well, there's only two ways. There's only two options. It can either be a debit or a credit. With an asset, we always debit it. To increase an asset, we debit it. I'm going to put a big D there for you. You increase it with the debit. How do you decrease it? Well, if you increase it with the debit, we must decrease it with the credit. Now, one thing a lot of people don't seem to understand, and this is perfectly fine, is that in accounting, everything can be debited or credited. Every single account you can possibly imagine can be debited or credited. Some people think, oh, this account is only debited. An asset is only a debit. That's not true. When a business receives an asset, they would debit it. When a business spends an asset or gets rid of an asset, they credit it. Everything can be debited and credited. Now, what is the process for liabilities? Well, a liability is something that you owe. You owe money to somebody. And if you think about it, well, okay, it's kind of like the opposite of an asset, right? Asset is something that you own. A liability is something that you owe. So, I imagine that you increase a liability with a credit. And yes, that is correct. When you increase a liability, when you incur a debt or an obligation, you credit the liability. Typically, if you think about it, let's say you're borrowing money. I need money. I need to buy a car. When you get, let's say you take the cash first, or let's say you just use the money to buy a car. Well, the car is an asset, right? It's something that you use, something that you own. It's coming into your business. To increase that asset, you debit it. There must be an offsetting credit. Every accounting equation, every journal entry has to have a debit, and it has to have at least one credit. Well, the liability, the loan, the money that you're borrowing is the credit. That is the offsetting credit. So if we increase a liability with a credit, we must decrease it with a debit. Very, very, very simple. We paid it off. Next, we have equity. Now, a lot of people get confused about equity, but very simply, it's assets minus liabilities equal equity. Now, the official accounting equation is assets equals liabilities plus equity. So, a simple way to remember it is, it's the exact same thing as liabilities. We have assets on one side of the equation, and we have liabilities and equity on the other side of the equation, and this side of the equation must be the same. And think about it. We have assets on the left, debit means left, and we have liabilities and equity on the right. Credit equals right. So to increase equity, we also credit it. And to decrease equity, we also debit it. Now we have revenue and expenses. What is revenue? It's money that you earn. Let's say you have a business, a tutoring business, kind of like I do, and you have a client come in and you teach them accounting and they, get 100% of their next accounting test. Well, if you're on the cash basis at least, when the client pays you, that's revenue. You're making money. But you also have business expenses. I have to pay internet. I have to pay my phone bill. I have to pay for my computer monitor. Those are all business expenses. Revenue is increased with a credit, and it is decreased with a debit. Now, why do we credit revenue? Well, if you think about it logically, it's just money coming into the business. It's some kind of value, increasing the value of the business. You're doing work, you're generating revenue, you're making money. That is increasing the equity of your business. So if you think about it, it's the exact same thing as equity. You credit it when it goes up and you debit it to decrease it. Think about an expense. It's the exact opposite. An expense is equity or value leaving your business. So if it's the opposite of a revenue, you would debit it, and then to decrease it, you would credit it. So the key lesson I want to impart on you here: everything can be debited or credited. You can debit an asset, you can credit an asset. You can debit a revenue, you can credit a revenue. And you have to understand that there's only 10 items here. It may seem hard at first, but when you do this 100,000 million times, which you will do if you work in accounting, this will become second nature to you and you will never make a mistake. But don't get frustrated because I had trouble with this. Everybody has trouble because it's such a new and foreign concept, okay? But it's as simple as that. Hope you enjoyed the video. Hope you learned something, and good luck on your studies.